Howdy folks, and welcome to the Daily Coin. My name is Rory, and I wanted to thank you all for listening to parts 1 and 2 of this in-depth conversation with Mr. Rob Kirby of Kirby Analytics. We're going to pick up right where we left off in part 2, and this is the next step, financial collapse. I certainly appreciate everybody tuning in today, and without any further ado, here we go.
You got it. We're off and running.
I think that something is broken. They've been trying to patch it together and paper over it for so long that they've actually forgotten what the hell it is that they're trying to fix, or what it is that's broken.
Oh, Rory, I think it's worse than that, because because you know what? I never actually gave you the punchline to the whole thing about LIBOR being broken. As I was stating, the whole episode of how short-term T-bill rates were forced towards zero was through surreptitious interventions by the U.S. Treasury, and specifically by a very, very secretive arm of the U.S. Treasury called the Exchange Stabilization Fund. It was the Exchange Stabilization Fund that entered the market through their prime broker, who is the Federal Reserve, and conducting short-term OTC swap trades called FRAs with JP Morgan. And it was during this time period when T-bill rates were being forced down by a couple hundred basis points over a period of a couple days, and commercial banks were reluctant to follow the lead of sewering T-bill rates by lowering their LIBOR rates, hence holding up the Eurodollar futures rates. And this forced the blowout in the TED spread, which is the difference in basis points between the yield on short-term 3-month T-bills and the 3-month Eurodollar contract traded in Chicago. And it was when the TED spread blew out to historic highs in basis points that LIBOR was first labeled to be broken. So what have we seen in the aftermath of this occurrence, which first appeared in Q3 of 2007? We've seen a number of commercial banks demonized for rigging LIBOR, and we've seen them pay token fines. And this has all been, in my view, this is all a cover-up. This is all a stupid attempt, in my view, to sweep under the rug the real culprit in the LIBOR crisis, because the LIBOR crisis was all created by the U.S. Treasury. The U.S. Treasury's fingerprints are all over the LIBOR crisis. They created it, they fomented it, they created it, and they are responsible in spades. So what I'm talking about is Hank Paulson and the chairman of the Federal Reserve at the time, who I believe at that point in time was Ben Bernanke. These are the people that should be paying the fines. These are the people that should be facing criminal charges. These people should be being taken up in front of the World Court in The Hague. These people have committed crimes against humanity.
Yes.
And what they've done is they've wrapped themselves in the American flag. If push comes to shove, they'll say they did it all in the name of national security, and they'll wrap themselves in the flag. And this makes them the same kind of criminals that were put to death in Nuremberg, who said they were following orders.
Wow.
There's no excuse for what they've done.
Right.
And what they've done has exacerbated financial issues around the world, macro financial issues around the world. And it's this which all criminally lies at the very heart of what is going on in our world on a geopolitical basis to the negative. All homegrown right in America, and you know what? And the thing is, the world's becoming savvy to what's really occurred, and as the world's becoming more and more savvy to this, we see the vain attempts to demonize and to make the likes of Putin look like the monster. You know, the real monsters are in the U.S. Treasury,
right,
and at the Federal Reserve.
Right. Absolutely. Do you think that it's breaking further still, or do you know that it's breaking further still, and they're losing control of it? Is that what's going on right now? Because it seems like there's a quickening going on
Oh,
with
absolutely, Rory.
everything falling apart. I mean, because
Absolutely, there's a quickening.
the lies
Sure,
are
there's a
getting
quickening.
bigger.
The whole world is becoming more and more savvy to what's occurred. They're becoming more and more savvy to the notion that this has all been American led. This has all been American connived. And the rest of the world's getting very sick of it. And this is why the rest of the world is galvanizing, whether it's the BRICS getting closer together, or whether it's countless countries adopting new financing arrangements with China on a bilateral basis all over the place. The dollar's days are numbered, and when its final day comes, I don't want to get into speculating on that, but the day is coming, and it will come, and I do believe I will live to see it.
That's kind of the scary part, is I believe I'll see it as well, and I'm not getting any younger, and whew, man, I don't think it's going to be pretty. I mean, as much as I want gold to be worth a whole lot, I don't want it to be, I don't know. I mean, gold is the thermometer and tells us how sick the patient is, and when the patient dies, I don't know what the temperature will go to, and that's what we're looking at, is the patient actually dying. Or let me ask you this, and kind of turn that a little bit. Rickards and several other people have come out and said, that the SDR is going to come in and basically save the day, and with its basket of currencies, and it's going to be backed by gold. Is that what they're working towards?
Well, of course, Rory. Mr. Rickards, being a globalist, Mr. Rickards, being a globalist shill, would love to see the people that have orchestrated the collapse of the U.S. dollar hegemony. He'd love to see it collapse into another instrument controlled by the same people. And that's what's really behind Mr. Rickards' promotion of an SDR, because it amounts to the same people that were sponsors of destroying the current system. They happen to be the same people that control the SDR apparatus. You see, the SDR is another globalist instrument.
Right.
So I don't think the rest of the world's going to be too keen on after the people that have burnt the current house down, handing them the keys to the new house.
So, and hence the BRICS development.
I think Mr. Rickards should go back to his gaming at the CIA, another globalist front organization.
Yes.
And he should try modeling up something in reality.
So you don't really see the Eastern world getting on board with the SDR and being part of that, or
not for a minute, unless they run it.
Unless they run it, okay. If I understand correctly, they're pretty close to having their own SWIFT alternative, and once.
That's Russia that's creating their own competitive thing to SWIFT. But just with regards to this, if Mr. Rickards seems to think that and he's voiced it very publicly, that the current IMF and the current World Bank, who runs the SDR apparatus, he seems to postulate that this SDR program is going to be the next thing. Well, if Asia really felt that way, why are they creating their own World Bank and their own system to create to compete with this lump of crap that Mr. Rickards is referencing? It seems to me, if the Asians had any faith in the system that Mr. Rickards is espousing, they wouldn't be creating their own apparatus to compete with it.
And you're talking about the BRICS Development Bank.
Yes.
And the $100 billion.
Absolutely.
That China has that. They've been the spearhead behind that, and I think that Russia, like you pointed out, they're the spearhead behind the alternative to the SWIFT system. I believe that they're going to tie those two together. Why would they? You've got your part, we've got our part. We're going to merge them together, but you work on it over there. We're going to work on this over here, but we're on the same. We're all in this together, and the whole idea is to get away from the dollar, get away from this debt and death instrument known as the dollar, and but we can't, I can't do it all on my own, and you can't do it all on your own. So you go work on that part, and we'll work on this part. And South Africa and Brazil, and you guys, y'all got your part. Everybody buy gold. Everybody in the meantime, buy gold.
Well, let's put it this. You know what? My comment to what you just said, Rory. Uh, there may be some vestiges of these countries working together, but I certainly don't believe they're all on the same page. Absolutely not.
You don't think so?
No.
You don't think that the
No.
BRICS nations are working in concert?
Oh, I think the BRICS nations are certainly working in concert, but I certainly don't think that the BRICS apparatus is working in cooperation and in consideration of the current World Bank and IMF regime
Oh no,
as controlled by the globalists.
no. I'm saying that they're building the system to work outside of that.
Oh yes, no, they are building the anti-dollar system. Correct.
Yes. That's what I'm talking about. I mean, and we can look at another piece of the puzzle. If Russia's building the SWIFT system, China's building the bank, and Brazil been very vocal. Rousseff has been very vocal about the internet, and people may go, well, that's not that big a deal. Well, actually, it is, because it's the pipeline that allows everything in today's world to happen, and they're running the line from Brazil through South Africa, through India, through China, and it's going to end in Russia. And everybody's going to tie into that, and it's going to be outside of the Google, Microsoft, NSA database. And
Here.
so
Yep.
that's what I was talking about, as far as, everybody's got their role to play, and those are three huge components right there. And once those three come together, which they should by the end of 2015, things are going to look a lot different. I mean, it's gonna be a much different place than where we're at now. As jacked up as everything is, I think it's going to get a whole lot worse before it gets any better. I really do. I mean, and I hate to be such a negative Nelly, but I mean, hell, all you got to do is look around.
Yeah. Well, I agree with your point that you're making, and I think it could even come sooner. I do believe that we're right in the wheelhouse right now, Rory, and I do believe that profound change is imminent.
Yes, that's. And speaking of which, I mean, we're basically 6 weeks from the end of the year. I mean, and I've talked to several people recently about 2015, and listened to several interviews, and there's a lot of people that think that 2015 is going to be a very significant year. And would you agree with that? Do you think that there's going to be just these world-changing events happening next year? I mean,
yeah, actually, in all honesty, Rory, I've been quite vocal in the last few months that I think we could see some very profound change still this year before the end of the year.
Yes, so, I agree with that too. Yeah. I mean, I think that, because if we just look at what's happened in the last 3 weeks, Greenspan coming out, re-emerging, I should say, from the gold closet, telling the world, gold is money. It's an important monetary reserve. Quote, intrinsic currencies like gold and silver are acceptable without a third-party guarantee. Those are words that came out of his mouth on October the 29th. I mean, with that being said, and the things that are happening with the bond market, with the QE, with Japan basically coming out and saying, "Yeah, we're just going to burn our currency to the ground and it'll be fine."
This is something that I just want to throw into the ring, Rory.
Throw it in there.
I don't know if you've ever heard of the rule of 72. I think it goes something like this. If you take the interest rate and you divide it into 72, it gives you how many years it should take for something to double in value.
Okay.
So I think it works roughly something along the lines of if you've got
is that Elliott wave?
No. I want to no. This is a mathematical rule. It's called the rule of 72. For example, if you want to know how long it will take to double your money at 12% interest, divide 12 into 72 and you get 6 years. Okay. So in a 12% interest rate environment, it should take 6 years to double your money. All right?
Okay. So
working with that same rule of 72, with interest rates at, let's just say, well, the 10-year bond rate is at 2.30. Let's just say it's 4, okay, which is almost double what it really is.
Yes.
For money to double itself, or for a financial asset like a 10-year bond to double itself, 4 into 72 is how many? 16 is that? 16 or is that 17? Both 17 years. That's with a 10-year bond at 4%.
Okay.
So investing in bonds, it would take you 17 years to double your money. So now let's look now let's consider what's occurred in the last 17 years in the price of crude oil. Price of crude oil 17 years ago was around $18. And today, crude oil is 75, I guess, West Texas Intermediate. And so that's like up by a factor of 4. Not a doubling, up by a factor of 4.
Okay.
So what that suggests to me is that the price of oil has gone up something like 3 times more than a financial asset would be expected to go up in the prevailing circumstances. But all I'm saying is what that should tell us is that crude oil, because of how many times it's gone up over that period of time, you would think that crude oil would be considered to be in a bubble, and yet people are talking about cheap oil at $75. Okay, we're told that oil at 75 is now cheap, but 17 years ago, it was a quarter of what it is today. But today it's cheap at $75. We're now told in the mainstream financial press that the price of gold at $1,190 is cheap gold. Well, I think in 1998 the price of gold was $256. It's up by a factor of 5. All I can tell you is, in the neighborhood that I live in Toronto, Canada, we never saw a crash in real estate prices at all in the 2006, 7, 8 period. Price of real estate in the home that I'm in, I'm going to say conservatively, it's doubled in price since 2006. Okay. And that's in the last 8 years. But so it's doubled. That's a doubling. And yet, I've got people running around saying that real estate's in a bubble because it went up, because it doubled in 6 years.
Huh.
How is it that the price of oil can go up 4 times and it's considered cheap? The price of gold's gone up 5 times, it's considered a bubble. And the price of real estate's doubled and it's called a bubble.
Huh. Hey, you meant gold is considered cheap. She said about
gold. Okay, I mean gold's considered having been crushed.
Yeah.
It just seems to me that the people that assign these monikers to things, it's all very arbitrary. And so what is cheap and what is expensive? Because you see, all they're doing is they're deflecting the commentary away from what the real issue is. And the real issue is that there's been a lot of money printing. There's been a debasement of currency. And what we've seen is the powers that be try to effectively channel the excess dollars that have been printed. They've tried to channel them into certain categories. They're trying to pick winners. They're trying to pick winners, arbitrarily pick winners, and pick losers. Because there are certain things that money would naturally flow into that would make their money printing look more criminal than what they'd like them to.
Yes.
There are certain things, like most people are very happy when their 401k goes up in value. Most people are happy when their real estate goes up in value. The system hates it when gold goes up in value because it shines a light on the fact or the notion that there's been gross monetary debasement. They don't like to talk about the price of oil too much as having gone up 4 times. Instead of being outraged that the price of gold's gone up 4 times, instead of being up in arms about the price of crude oil going up four times in value, they'd rather say that oil's cheap now at 75. But if the price of gold goes up 4 times, the system will do everything in their power to try and pound it back down. Gold's in a bubble. According to the powers that be, the point I'm trying to make, gold and oil have both gone up ballpark 4 times over a relevant time period. Ballpark. And the system, the powers that be, would like us to believe that oil is cheap, but gold's still in a bubble. That's the commentary I hear when I turn the TV on.
I hadn't thought about that, but you're absolutely right.
Gold's always overvalued at these levels and should go lower, and crude oil is cheap. When things go up by a factor of 4 over a period of a dozen years, that is very inconsistent with inflation rates at under 2%, which is what they've also been telling us over the same period of time.
Anybody that buys inflation at 2% really needs to take another look at their bank account.
So let's just put it this way: if they were anywhere near being accurate in inflation being 2%, using this rule 72 that I started this whole line of reasoning with, you would normally anticipate pricing of most things in free markets to be up by a factor of about 25%, maybe, over that relevant time period, using their government's numbers of what inflation is.
Okay.
So what it says is the government can't even put out a straight argument. The powers that be can't even put out a straight argument. They get caught up in their own lies. Well,
but since nobody's paying attention, and unfortunately.
Anyway, I just threw that into the ring as a bit of an afterthought.
Well, we've been speaking with Rob Kirby of Kirby Analytics, and Rob, I certainly appreciate all the knowledge. My goodness, we have covered the gamut. We've covered the world, and hopefully people have learned something. I know that I sure have, and I greatly, greatly, greatly appreciate you spending this much time with us this afternoon and sharing as much as you have.
Well, it's been my pleasure, Rory, and any time is a good time, and always good to get the knowledge out there, and I hope everybody gets something from it.
Well, thank you so much, and you folks just please visit Rob and lots and lots and lots of free information at his site at KirbyAnalytics.com. I'll talk with you soon, and once again, I really appreciate all your time this afternoon.